Hey everyone, it's Louisa here. It is May the 28th. It's Wednesday, May the 28th, and I want to take you through a great trade that I took today. It was the Viper trade, which is the most current strategy that ICT has released recently. It worked really, really well today. I love the setup, and it really dovetails very nicely with my signature trade, which is the 2022 model, because I need a sweep of liquidity and then displacement and break of structure. So this has the change in the state of delivery. It has a fair value gap. It had a breaker later in the day. All in all, it just was a fantastic trade. And there were two other trades that you could have taken today based on this trade. So with no further ado, I'm just going to take you through and share my screen with you. There we go. Okay. I got a good size screen here for you guys so you guys can see everything. So let's take a look at the big picture, and then we'll jump down to the 1 minute and 5 minutes so you can see the detail of the trade. So Asia ranged last night, which is, we know that it's engineering liquidity above and below. It dipped down. London moved a little bit down, and then we had this big movement up early in the morning. So this started at 5:45, and I think it was around 7:10. This candle here is 8:30. So we had this kind of continuous move up, a little pullback. We know that 3 candles is a signature pullback. That's how we know. It's a retrace rather than a. Let me just adjust my camera here. Sorry, guys. So that's how we know that it's a retrace. 3 candles generally is a retrace, and then price moves up. We had a strong candle down, and then price came up at 9:30, and I'll just move this over here, but I wanted you to see this vertical line is 9:30. We had this big wick. Okay, so we had a big wick. That's our Venom. So it's taking out liquidity. And here are my times that ICT wants us to mark out. This is between 8 o'clock and 9:30. We mark the high and the low, and then we wait for price to sweep the high or the low. So here we not only swept the high, but it was with this beautiful Venom candle. So the Venom candle is basically, think of like, I guess, venom from a snake or something, and it's taking the liquidity, and then we get this immediate pull back here into the range. So this is on the 15-minute chart. I want to zoom down into the 5-minute now for you to take a better look. I'm going to take this off for now, and I'll put this back on in a second. Okay, I'm going to take that off. So again, here's our candle at 9:40, and here is the Venom wick. I'm going to put a link in the description to the Venom ICT model so you guys can take a look at it and see for yourself how this strategy is played out. Okay then, so if we go down now to the 1 minute, just so now you have the bigger view of what happened. So here's the Venom wick. So we have the drive up, we have the Venom wick, and then we have a displacement down. Now I entered the trade here. The strategy wants us to wait for this displacement to be finished and then price to come back into the fair value gap and then drop. That would be the entry. But price was falling so quickly that I decided to just jump into the trade here. So this is where I entered the trade with 5 contracts. Here was another entry that you could have taken off of this fair value gap. But again, for the Venom model strategy, we're supposed to wait for price to come back up into this fair value gap. But that actually happened this afternoon, which was super, super cool. Anyway, I exited somewhere down here. Let's just take a look. Whoops. So I entered on this wick and then exited here. Price came back up into this fair value gap and then just continued to kind of drop, and for the rest of the morning price just ranged, so there was nothing to be done for the afternoon. But take a look and see what happened. So what I was waiting for, I was waiting for price to come back up into this fair value gap. So, oh my God, sorry, I think it's a motorcycle. So I'm waiting through all this chop, and I'm waiting for 2 o'clock to see if we could get some momentum. So here's the 2 o'clock vertical line right here, and you can see that price starts to make its way up to this fair value gap. Now here it doesn't quite make it up. That's 1413, so that's at 215. Didn't quite, so I waited. Price came back down. This time we swept London. So up till all through this range we had not swept London. Okay, so price came down, swept London, and what do we have down here? Well, we have this Viper candle again. So we have this wick. It immediately came back into the range. We had this fair value gap form. You could have taken an entry here and taken price up to the next area of liquidity. Now it happened to come into this fair value gap. Now here are the two fair value gaps that I am waiting for price to re-enter. Ideally, if we want to see how far deep we are in premium versus discount, I'm going to take the low of the day. Actually, it was here, so pretend that we hadn't seen this price action yet. Yeah, so here, as 2 o'clock started, this is kind of where I was. So this is our premium, and this is discount. Oh my God, this is what I have to live with, is this kind of noise. You just can't imagine. Anyway, so here I'm waiting for price, and I want price to come deep into discount, which would be this first fair value gap. Well, you can see that price reacted beautifully to this fair value gap. It did not make it up into this fair value gap, so I did not take this trade. However, if you did take the trade, it would have been 500 down to 332, so 270 points. Beautiful. This was worth waiting for. Then we get an immediate reaction again down here, and then price comes all the way back up, and where does it go? Into the first fair value gap, which is that first fair value gap from the sniper or the Venom first fair value gap from this morning. So very, very cool how predictable price was today, like reasonably predictable, right? Price is never going to be 100% predictable, but there were so many entries. So I had this nice entry. You could have entered here. You could have entered here on this fair value gap. You could have entered down here, swept liquidity, and then back up to here. So what I'm interested in watching tonight, because we came back up to this fair value gap today and completed this Venom strategy, I'm interested to see whether, because price came into and touched this fair value gap, if we're going to get a bit of a sell-off tonight during Asia and London. So that's what I'm going to be watching tonight. So anyway, I just wanted to share this with you, and I also want to share a couple of thoughts with you, because I think this is important. There's a lot of strategies, ICT strategies, that, you know, you can skim through lots of YouTube channels, and, you know, there's a 2022 model, there's the silver bullet, there's the Venom, There's change in the state of delivery. There is unicorn. Like there's just so many. And I think when you have a really good fundamental base of understanding of the base concepts, you're able to take these base concepts and then really quickly pick up the strategy. Today was my first day trading the Venom Strategy, and I'm going to share with you just a few notes that I took that I just worked off my notes this morning, but because I understand the fundamentals of ICT's core building blocks, and what I mean by that is fair value gaps, order blocks, inverted fair value gaps, breaker blocks, mitigation blocks, all the different types of fair value gaps that there are. Once you have a broad understanding, you can take those core concepts and apply them to absolutely any or all of the strategies. And I find that a lot of the strategies have like a core fundamental basis for a lot of them, not all of them. But for instance, if you look at the Venom, if you didn't study the Venom strategy, well, this looks like a change in the state of delivery, which it is. It's a change in the state of delivery. And, then it comes back into a fair value gap. Do you have to know that that's the Venom model? Not necessarily, but you can recognize it once you understand what the model is. I want to share with you just one other. No, I think I won't this time, but I wanted to share today with you because I think it's really, if you have the time to study ICT core concepts, I think it's just going to enhance your ability to trade all kinds of different strategies without spending a lot of time studying them. Like today, I had just made my notes on Venom, and then I took a look at it. I was watching my notes, looking for kind of like the key concepts that the trade has that you need to meet. It has to have a break in structure. The second candle has to break below the first candle. Like there's these kind of like checkbox items. And I was just following along from my notes, and it was a very predictable, very straightforward trade. And then to be able to see that same trade later in the day about 3 times, just in different time frames, but the general principle is the same. It's a sweep of liquidity with a very fast candle wick, then a second candle, good displacement, fair value gap, break of structure, enter the trade. Like it's kind of like one and the same once you start, once you have a broad understanding of the core concepts. So if you're studying ICT and you're a bit frustrated, it takes time, and once you have the core concepts, you're really going to fly with this. Like it's going to become very predictable where price is going. And if you had told me that like almost 2 years ago, I think I've been studying ICT, well, less than 2 years. I think it's been 18 months. Like that's pretty amazing. So anyway, I hope you guys have a great night. Thanks for joining me, and have an awesome rest of your day. Okay, bye for now.